Welcome back, Alpha Hunters. Happy New Year's to you. It is the first day of the new year. I've been on the mic January 6th. I was supposed to be out of town late last week. I was going to be in Kansas over the weekend. I was going to leave late last week. That wound up not happening due to, if you've tracked the weather, major storms that have gone across the middle part of America that I would have been driving back during and actually would have severely limited our travel. So that got pushed back. I actually wound up not going. So I just took the chance to just enjoy my time off. And anyways, I'm not going to look so much at the daily stuff as we normally do on the daily live stream and midday recap, but I'm going to get out a year look ahead, kind of what to expect. I thought about doing that late last week, but with a lot of the unknowns that we were kind of dealing with, I never really got a chance to kind of deal with that for our travel. So I'm going to do that now, and we'll just kind of go ahead and plan, kind of look ahead as to what's kind of going on, what to expect, and those kinds of things. If you are wanting a quick midday update, really, I would expect us to kind of go higher. So I don't really expect too much kind of craziness from that. Mostly because we have really, from the high that we put in on the SPY back on what was it, December 6th. We did slide back in middle part of the month of December. Then we had a pretty quick little drop off all the way down to a gap down on Friday, December 20th. We had a bounce from there up to December 26th, the day after New Year's, but we wound up dropping off here. And so this drop off that we hit on the first trading day of 2026 just barely took out that low from December 20th. So basically, while it looks like a double bottom, you can also say it's an ABC correction going higher. So I would fully expect probably to be hitting some new highs sometime here in the month of January. Honestly, that's kind of what I would be expecting. Mostly because it's an ABC correction, and typically when you get those, you will see new highs shortly after that from the previous trend. The interesting thing is going to be here over the next probably week, 2 weeks, is as we kind of get back up to that high of December, are we going to kind of flatten out, barely make a new high, and then we're going to start to set up, like, if that does play out and we kind of just barely get up here, will that start to set up a lot more like a sideways topping action, right? Because we definitely were just completely lost the steam there in December, and you never really know when the market's going to do that. But this was looking like a pretty good head and shoulders. Obviously, that's why the head and shoulders, when you start to look at the possibility of a head and shoulder on that neckline, you want to definitely see that breakdown and then the retest and the go lower, because of the possibility of also the ABC correction. So if we do wind up just pushing up here over the next couple days, but then we just kind of flatten out and barely take out highs, and then do something like that where we've made a run, we made new highs, we kind of just flattened out, kind of like how we did in December, what will that be? So I'm going to be really curious to see just what we do here in the next few days. Obviously, as we start to look at the just normal daily trading activity tomorrow, what will that look like going for the rest of 2025? My main premise of 2025, okay, this is the main thing I'm looking at, is the new political party that's going into the U.S. The Republican Party that's going in, that won the election. They have spoke highly and very much about getting the budget and spending under control. That does not sound like a great recipe for market bullishness. That's all I'm going to say on that. It's not one where we saw huge amounts of debt spending over the previous administration, right? And you're just super high levels, prices, bullish run. And this is already super extended compared to long-term exponential trends. Let me just go back to the SPX because I have it on here. Monthly? Good grief. There we go. This is definitely going back to 30s or so. And typically you are relatively within this channel. The one time we got out of it was late 90s, 2000s. And if you know anything about what happened then, the dot-com bubble, right? One of the reasons why we wound up going on such a high level extended bullishness on the market has everything to do with Y2K, the Y2K spending that was the stimulus that was added into the market. A lot of people thought we were going into a bear market in like 97, 98-ish, but the thing that caught people by surprise was the amount of spending the government's stimulated the global economy for Y2K, right? Y2K, everybody, the fear of, oh, computers are going to send us back to the Stone Age because they're going to reset to the Stone Age basically on dates, and financial markets wouldn't have liked that, So they basically stimulated spending for Y2K services and stuff like that, Y2K updates. So that's one reason why we saw this huge run up into the 2000, and it basically stopped. Like, nobody, that was basically when people, businesses stopped really growing. That's why you had, the huge bubble correction that lasted about 3 years, from 2000 to 2003. So we've had, not gonna say an exact similar mirror-like replica that's happened here recently, but we have seen a lot of debt spending. So it is, not for one. It's always, trying to assess, your current market conditions with prior patterns, right? And that's kind of the tough thing, because it's never exact, right? And this is why you deal in probabilities and estimations. Is like, oh, in this scenario and that scenario and this scenario, and you take all that together and you say, oh, well, this is kind of what happened. If you take into aggregate all the different scenarios that kind of meet that condition. The other thing that wound up happening at the end of the years, we actually did wind up having, let me bring it up here on the SPX, for the year of 2024, and if for the next few days I say 2024 and I mean 2025, completely sorry, but if I say 2024 and I mean 2024, again, I apologize. It's just going to be really confusing until I get used to that. Anyways, we were up about 23.5% for the year. So that's then another back-to-back years of up over 20%. I believe we were up 26% in 2023. And we looked at a couple of weeks ago. Let me see if I can just go and bring that up and we'll take a look at that. A couple of weeks ago, we looked at the, back-to-back years of plus 20% return and what that kind of gets you. Here you go. So I'll bring this up real quick. And mostly, well, okay, so I didn't do it with, I was mostly looking at incumbent law, election years. But there's not too many times in history where we've actually had back-to-back years of 20 plus percent. So I'd have to really go back through this. This is a great stretch from 2019, 2020, 2021. Even though we had a huge 35% correction there, the kind of the first quarter in 2020, the market still did 16%. So those 3 years were strong years. I actually don't have in here 23 and 24. So we know what we did for 24. Let me go back to 23. We did roughly, we did well over 20%. We did about 24.5%, 25%. So yeah, it's definitely over 20%. The statistics that say whenever you do back-to-back 20%, I don't have it off the top of my head. Obviously, I wasn't really prepared to kind of show that, but it is not great. It's not bullish. It's not necessarily bearish, but it weights more bearish. There was a couple times where it was like really, or there was like 1 or 2 times where it was kind of strong. Here's one that was kind of close, right? That 98, 99, really close, right? 99 was 19.5%, and then you had the 3 consecutive years of the bear market where the following year, then you were down 10%. But this mid 90s, look at these back years. Just crazy. 34, 20, 31, 26.5, 19.5% returns for 5 years. That's why a lot of people like talk about, man, that mid 90s run was just absolutely nuts. And it was nuts. Just trying to go back through some of the history here. Here's another one. It's kind of close, not quite 20% there in 76, but you can see the following year, following a 31.5, 19, a little bit over 19% return year, we dropped 11.5%. As far as here's a really good one. 40 in 54, 55, we had a 45% return. It's probably coming off of the bottom of a bear market or a bearish move that we probably had in 53. That's the only time you really get strong bounces like that at 45%. And then you got 26%. But you notice in 56, oh, we were only up, 2.6%. Well, if we go look at 1956, which we can do that. So if we go back to 1956, let's just go look and see 1956. Yeah, I mean, it was just started like a pretty large topping out there. It wasn't, so we went a little bit higher there in the first half of the year. And then we started the pullback from the top halfway through the year. And then we had basically a bear market. I mean, we were about a little bit over a 20% pullback, because I'm not quite at the lowest level there for that pullback there from mid 1956. Yeah, summer 1956 to the low that we put in about a little bit over a year later, in about September or so, 1957. So basically, it's not going to be a bad time to start to look to what's going to be some safe plays, that kind of stuff. The market historically says whenever you do these kind of back-to-back years outside of like the mid 90s, mostly because a lot of people thought we were topping out right there in that 98 time period, but that's when we got the stimulus for Y2K. Outside of that one time period, really, you see a lot more decent bearish activity historically after two back-to-back 20 plus return years. Also, when you factor in, the incumbent year where, the incumbent party lost, right? Where the incumbent party lost, and then what happened the year after. It's not too often. Here was one in 2020. There was a lot of COVID spending. Makes sense that, the year after we went really high. But not too often, in history, where the incumbent party lost and the market was up about 20% or more than 20%. It happened twice here back in 76 and 80. 76 up a little bit over 19%. Market was down then 11.5% a year after. 1980, market down a little bit over 25%, almost 26%. Year later, down about 10% for the year. Might have been down more than that. So that would have been 81, right? So if you kind of combo a lot of those kind of high level analytical type factoids and the fact that the incoming party says that they want to control spending coming out of the political system, it doesn't give a great recipe for market bullishness. So that would be the one thing I would say. I would expect some turbulence. Will we drop 30%, 40%, 50%? I mean, that's a great question. I'm just saying the upside is probably not as significant as the downside, and is that happening here over the next month, 6 months, 9 months, 12 months? I mean, all those are great questions. I just don't see the upside, especially nearly as much as what could be the downside maybe over the next, definitely a year, 2 years, especially if they are serious about cutting spending and things like that. So with all those factors to be considered, I think you're going to look for some high quality plays as far as generating decent dividend cash flow. And I mean dividend, I don't really mean stock dividend, but maybe just cash flow assets or protective assets, things that will do well even in areas of non-government spending type cycles and that kind of stuff. I think protecting capital value is going to be most important here for the time being going forward. And that's just kind of my opinion. I kind of have been on that train for a little bit, but it's like one of the things that I'd say I definitely got wrong is I never realized how much the government was just going to be nonchalant about how much debt they continued to just pump into the system. And that would be the number one thing I'd say. So if the new incoming party is serious about getting a lot of that under control, then that would be where I would have real concerns if you've been in this market for years. I mean, decade plus. I mean, there could be some significant repricing if the leverage system is taken out, if the leverage levers are readjusted. That's just kind of my 2 cents on the market. Honestly, until we have some more significant breaking of trends, and really probably the big one's going to be the 100 moving average on a daily. Once that one kind of breaks, then you're probably going to be looking for stuff maybe lower. But if we barely, on this new run that we're kind of gotten into here recently to start the new year, if we just barely come up and get into new all-time highs and just kind of flatten out and then top off and maybe look to roll over here over the next few months, then yeah, I would say it would be look a little bit more of, we're breaking upward momentum. Now we're doing sideways, and then you're gonna look for the downside after that. But it's not gonna be like, I mean, this is the market, guys and gals. This is not going to turn bearish in one day. Okay, technically it won't. It might do it fundamentally. We might get one data point sometime down the line that's like really eye-opening to a lot of big-time investors, but they cannot pull money out. I mean, big-time investors cannot pull money out as fast as they would like to, and they would admit that. Like, sometimes they would like to be into certain things, but they would push the price around so much it wouldn't be advantageous for them. So it takes time to see the market kind of turn, even if we do go into a bearish spell here. But I don't see the upside, and mostly because government spending, and it's kind of a bummer to even say that that's like the main thing that goes into the stock market. But it has become a realization that is probably the main thing that goes into stock market performance. The only thing I'll say a little bit different about that, though, is if you're looking to do stock now, I mean, that's just speaking stock market generally. So if you're finding good opportunities in stocks specific, that's different. Like, the market might go down 15%, but if you find a good stock out there, it might only go down like 7%, 8%. If the market goes down, everything's most likely going to go down. But if the market goes bullish, if you find a really good stock, it might lead the market bullish. So if the market goes up 12%, you might find a stock that goes up 22%, something like that. So, doing due diligence on single stocks can really help also protect the portfolio. But those are really tough, because you never know what fund has a large concentration in something and they need to liquidate stuff. That's one reason why I don't really like large pools of money into individual stocks, because you never know who really has large portfolios that are looking to sell because they have difficulty with other assets. It happens, guys. It happens. If you don't believe me, go look at 2008. go really understand that. A lot of investment shops had liquidity issues, and they liquidated, assets that had liquidity. So it is crazy how much you think your high quality Apple, Google, Amazon would really protect you during those downtimes. But those are the things during liquidity crises, which are basically bear markets. Those are the things that get hit the hardest because they have the liquidity. People can get out of them and raise capital easier than other things. When you got to raise capital and there's no liquidity in certain assets, then you can't raise capital. We will see how the year goes. Just not super bullish, especially with the new administration coming in and talking about cutting back, debt spending. And, once we get in, we find out that they're not cutting debt spending and they're continuing to, finance and run the government on debt. And obviously they would be liars, and it's probably you're just going to want to be invested in the stock market. So that's why I'm not saying like just be outright bearish, but I'm saying you gotta like, hey, you know what? The upside might be real limited here until we figure out what the new administration is really going to do. Were they in politic mode, or were they serious about what they campaigned on? Alpha Hunters, have a great rest of your day. Welcome to 2025. Take care.